Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market, and a wild day out there today, not necessarily in the broader market, but Tesla getting a lot of attention. I'm going to try and get my videos done quickly so I can do a Tesla specific video. Traded it. I think I had 45 orders today with 17 total round trip trades. Some of those were scaling in and out, which is why there were more orders than trades, but I'd like to go over that if I have time. So looking at SPY, daily inside bar today. Certainly a much higher open than the bears would have hoped for. The hourly chart, on this bounce, we knew we were just looking for an hourly lower high, and we knew a daily inside bar was the most likely scenario. How do we know that? Well, the open. The open put us right in the middle of yesterday's, or I should say Friday's, very large range. So the bulls are going to have to come out of the gate in full force to break 327.43. They came out of the gate in full force. We were riding the 5-minute exponential supports all morning until we lost them. I used the 4 and the 8 period exponential support on my Fidelity account, and it was just a great guide. We lost it. We then entered a downtrend, but I was swinging a position in SPXS over the weekend, and I saw the open, and I said to myself, well, bummer, I'm in a bit of red now, but I'm not going to sell my position because I'm anticipating a lower hourly high compared to Friday, and if we change the hourly trend, then I will exit that position. So as soon as we set that lower high and started pulling back, I then knew the most likely scenario was going to be look for an hourly higher low compared to the low of Friday, because we had so much space on either side of that range from Friday. So what I did was exited my bearish position when the 5-minute trend changed, because the 5-minute trend change is the first indication that our hourly higher low has been set. So exited my bearish position. I did enter a bullish position as well using the 2-minute RSI. The 2-minute RSI was pretty beat up, and at that point in time, it was a lower low. We had a low of 323.76, and as soon as we broke that low by 4 pennies and saw no follow through and started the bounce a bit, I entered SPXL. I put my stop under the low with very small risk, knowing that I'm looking for an hourly higher low. I then left the computer, which is the only way I can hold for hours, and came back and sold on this bearish action. So not a huge win, but played the S&P 500 in both directions. And at this point, I'm patiently waiting for clarity on the hourly chart, because the hourly chart is tightening. High, low, lower high, higher low. We have to see how this inside bar breaks on tomorrow. Google just had a bearish reaction to earnings, but not very significant of a reaction. So the S&P 500 is not seeing a large reaction in extended hours. If it's an inside bar bear break, we're looking right back at the low. And the most important thing for me is the low on QQQ and XLF, the low of the initial virus reaction, which we'll look at in just a second, because those have not broken yet, while SPY obviously did already break to the lower low. If the inside bar breaks bullish, we're looking right back at the high of the bounce initially, 328.63. So looking at IWM, inside bar, if it breaks bearish, we look to the low. If it breaks bullish, we look for a daily lower high compared to 165.56 due to the distance that we are from that resistance level. So all about the inside bars. And again, just knowing the range of Friday and knowing where we were opening this morning, odds favored inside bars to form today. QQQ, so this is the level I'm talking about. This is the most important level for me this week. If this level holds, the S&P 500 bears are not going to get any follow through. If the bulls can break 223.56, we're looking right back at the all-time high. Hourly time frame in reaction to Google, little bit of a pullback, not significant. Financial sector, as long as the bulls hold 29.75, the S&P 500 bears are not getting any significant follow through. Pretty much these levels are going to determine if these levels hold, healthy weekly S&P 500 higher low. If those levels break, it opens the door for it to be a more significant pullback. So those are the line in the sand levels. Remember when XLF 30.46 was our line in the sand and it broke? And that's when the significant market weakness started. Well, now we have 2 more lines in the sand, and it's an if-then scenario, as I talked about. Thanks to everybody that tuned in to the live Q&A yesterday. That's on our YouTube channel if you missed it. but I talked about if-then scenarios. If QQQ and XLF hold their initial reaction lows, then the S&P 500 is not going to see significant downside. It's a requirement that those levels have to break for significant S&P 500 weakness. XLV, daily inside bar as well. We have primaries starting tonight. Bernie Sanders, if he wins, I'm very curious to see how healthcare and biotech and the market in general reacts if Bernie Sanders starts gaining some ground. He's obviously bearish for the market. He's bullish for the marijuana sector. And we're going to be watching what polls and numbers tell us. And I love the people that come on and give their opinion, say there's no chance Bernie Sanders wins. Saw that 1,000 times about Trump having no chance to win. So I don't care what your opinion is. I care what the data is telling us, because that is what the market is going to use to price in probabilities. Daily inside bar on watch for tomorrow. Biotech sector, nice bounce. Daily lower low with no follow through. This is something that I've put into my trading game plan for over the last 2-3 years. And it's been a game changer. Normally, I never look to buy bullish if we break support. I never look to buy bearish if we break resistance. But more and more, I'm starting to recognize breaks with no follow through being counter momentum signals. I just showed you one that I used on SPY today, a bear break by 4 pennies with no follow through. So I looked to enter bullish. XBI was similar, a daily bear break on Friday with no follow through. And here we are breaking the high of Friday. Now the question is, can we break 92.25 resistance to break the daily lower highs? Or if we fail from 92.25 resistance, does that mean look for a 4-hour inverse head and shoulders pattern? With our left shoulder, this is the head. If we fail 92.25, we need a 4-hour higher low and then a trend change attempt. It's what I'm going to be watching for over the next couple of days, all about 92.25 resistance and the potential 4-hour inverse head and shoulders. SMH is semiconductors. Worth paying attention to, not a ton of weight in the S&P 500, but it has been a very bullish sector for all of the last, pretty much all of 2019. We have lost the weekly uptrend, so paying attention to it. We closed below that weekly 12-period exponential support, which had been holding for about 4 or 5 months. Daily inside bar, if it breaks bullish, we're just looking for a lower high compared to 145.58. A lot of chips at play in China and the slowdown there anticipated from the virus, definitely leading to a big hit in the sector. But just another daily inside bar, like most names. The VIX. Daily inside bar. If it breaks bearish, the bulls must hold 1490 for the higher low pattern to continue. If it breaks bullish, we're looking right back to the top of $20. Gold. Daily 12-period exponential support continues to hold. At this point, I'm defaulting to 1563 as the more important level for me. If 1563 can hold, the uptrend remains intact. If that level is broken, zoom out to the 3-day chart, because our 3-day lower high is set and we then need a higher low compared to 1536. Silver is a tightening daily range, a little bit different. Lower high is set on silver, so high, low, lower high. Bulls have to hold 1734 for a daily higher low to try and form here. Tightening silver range. And with all that, we have a tightening range in the miners. So at this point, lower high is set. Bulls are trying to hold 3056 for a higher low to remain in this tightening range. Have to see a green day tomorrow for that to be the case. If that level breaks, pretty much if gold breaks 1583, and starts to pull back on this 3-day time frame, it's 1563. So if 1563 breaks, look to bear miners, because the bear miners, like dust, will be trying to change their daily trend. Higher low, and if the bulls can break 615, we have a daily trend change underway. So we're getting to a little bit of a tippy point, where if the S&P 500 inside bar breaks bullish and the bounce continues, if the dollar bulls continue their extremely strong bounce from Friday weakness, and if gold loses 1563, longer term equilibrium likely on gold. Oil, free fall. Oil is a falling knife. We broke our support. We had to hold 5103, 5055, 5063. This range of support has broken pretty clearly by over 1%. So the RSI is beat up, absolutely, but the RSI can go a lot lower when there is no previous price support level. And right now, we're looking down at the next level. Nothing's really clear in this range. 49.71, 48.33. So yes, we're looking for an oil oversold bounce in the near term, but RSI alone is not a reason that I want to be in this trade. I'm waiting for a shift in the 4-hour trend unless things get real extreme. But as of right now, they're not extreme enough for me. 12-hour RSI was lower just a couple days ago. The daily RSI, which is currently at 20, how does that shape up historically? We hit 20 back here in June, and we hit 14 back in 2018. So it can go lower. So RSI alone is not enough. If the daily RSI gets down to 14, I'm going to start scaling in based on RSI alone. But otherwise, it's the 4-hour trend, and anything under 51.95 is a 4-hour lower high. Natural gas, nice bounce, but the 4-hour trend never changed. Now it's just a double bottom attempt at 182. We have to hold 182 and break 189 if we're going to change this trend. Bears are keeping their short-term control with every bounce just leading to a lower high at this point. That's where we stand in the market. Daily inside bars all over the place. We'll see how they break tomorrow, indicating short-term direction with our clear line in the sand levels on QQQ and XLF to be watching for the rest of the week. Have a good week. Have a good day. Got some seeds over the weekend. Party time.